Go into a little bit more detail, and we're going to take this concept of the two groups and apply it directly to a chart. So we've established that we have our two groups. We have a group of people buying, we have a group of people selling, and in the middle we have a tornado of volatility and trading, people both selling at $9.33 and buying at $9.35, and that creates this volatility where the price goes back and forth between these two prices. 933, 935, 933, 935, till eventually one of these breaks down. Now, what we've got in this particular example is a big area of support. We've got a lot of people who are willing to pay $9.33, but we've got an even bigger group who are demanding that they want at least $9.35 for their shares. Now, there's no one at $9.34. Perhaps once in a while in this tornado, a trader will pop in and someone might scoop that up. But for the most part, we've got this big area of support and a big area of resistance, and no one is budging. So what does this look like when it actually shows up on the chart? And it's a little bit like this. So down here, we've got our area of support. Up here, we have this area of resistance, and we can see that even though we are trading quite a bit inside this range, we're not able to get below our support. We're not able to get above our resistance. And eventually, something changes. We push the price down. That is weakened, that support is no longer there, and then the price starts to fall. So going back to our two crowds, $9.33, $9.35, if we visualize this on our chart, we can see how this crowd of $9.35 manages to keep the price down. Because there are so many of them who are only willing to sell at $9.35 and no one willing to pay that much, the price can never move higher than $9.35. Inversely, we have a group of people who are willing to buy everything that they can at $9.33. So every time someone sells into $9.33, it doesn't move at all. Until what happens? That entire group who are willing to buy at $9.33 gets everything that they need. If we go back, we see that that group is much smaller than our $9.35 group. So eventually, the $9.33 support wall gets removed. The order book opens up, and we still have this big group of people up here who still need to sell. Maybe they start selling at a lower price in a panic because they need to get rid of those shares, and they drive the price down. So that is sort of how supply and demand, and it's a very basic introduction, but that's how supply and demand creates these price levels for us. We have two different groups who want two different things, who are unwilling to change their prices. The ask does not want to make any less than $9.35, and the bidders don't want to pay that much. So you get this range-bound trading where individual traders can come in and set the individual price point until one of those big groups makes a change. The price will not move. In this case, again, we lost our support. That group walked away, and all of these guys up at $9.35 start to panic a little bit, and they might lower their price to $9.30. It's trying to get ahead of each other and drive the price down, in this case, all the way to $9.